The broadcast is now starting. All attendees are in listen-only mode.
Hey, welcome everybody. It's Mark Maneri here, and welcome to the National FAIRtax webinar. We're excited that you've taken the time out of your evening tonight to join us. And man, I'm super excited for our presentation tonight. So I'm rejoined by my colleague Jade Wally, who's a CPA, lives out west, and has been somebody who's been following and involved in the FAIRtax for some time now. And he brings energy and a real depth of knowledge, and it's just a real privilege for us to be with him. So thank you, Jade, for joining. And how we're gonna work tonight is I'm gonna give a very brief overview of the super high level points of the FAIRtax, and then I'm gonna pass the presentation over to Jade, and he's gonna go in depth on our special topic tonight, and it's a fascinating topic. When you look at the statistics around tax evasion right now, it is absolutely mind-blowing what is happening. I don't know how else to say it. It's when Jade shared me his slides, I was, really blown away. So he's going to take you through some incredible stuff, and then we're going to finish the night off with some Q&A and get all your questions answered for those of you who have questions. So yeah, just want to point out a couple of things. You can get our attention by either raising your hand on your control panel or by typing in the control panel at the bottom, and we welcome that. We want this to be interactive. We will approach the Q&A session in a way where we want you to ask anything. Like, there's nothing off limits here. And while Jade and I happen to be really adept at the FAIRtax, we don't profess to be the authors of it. That said, we're proponents of it, and we're here to educate and share what we think will make a real difference for our country. And we honor you guys for taking the time out of your evenings to get educated yourself. So with that, I'm going to get us started here. So I love sharing this slide. And what we know right now is that our current tax system, it doesn't work. And for years, no, better said, decades, we've been putting Band-Aid after Band-Aid after Band-Aid on it. And what we've got right now is something so convoluted that even the most expert tax advisors and CPAs, like the colleague I have on the line, there's just no way for any one human being to amass knowing every line of this tax code. It's just impossible. And that complexity creates a situation that really creates a disadvantage for our citizens, for you and I, and for our businesses and for our country. And so we've got to solve it, and we believe we've got the solution in the FAIRtax plan. So the FAIRtax is legislation that exists right now. It's known as HR 25 in the House, S18 in the Senate. And the FAIRtax is what we like to say simple, fair, and transparent. And so simple, 131 pages double spaced. Imagine that, going from over 75,000 pages to 131. There's something reassuring about that. You could download this legislation and you could read it and make sense of it. And yeah, good luck with what we've currently got right now. So the FAIRtax in its most simple form is a consumption tax, not an income tax. And you only pay taxes on what you spend, not on what you earn. That is a paradigm shift in what we have right now. And there is sister legislation that will repeal the 16th Amendment, which gives Congress the power to tax income. And so the distinction that we want to make right now is we're moving from an income tax to a consumption tax. And another point to make here is the fair tax is different from the flat tax. So many of you have likely heard of the flat tax, and the flat tax still taxes income, but it does it at a systematic level across the board for all income levels. And we believe that's still regressive in nature and still leads to many of the same challenges that we have today in our current income tax-based system. So what you've got is in the fair tax is a fully transparent, with no loopholes, paradigm shift in our revenue generating legislation. And you've got one tax, a consumption tax on new retail goods and services, and that is to the tune of 23%. It's a national retail sales tax, and that will be included on all receipts. So to speak a little bit more about this, what we would say, or more of what we'd say, is I want to point your eyeballs to a tax that's levied on new retail goods and services. So a great way to illustrate this is using the home buying industry and purchasing a home as an example. So when a construction company, a for-profit business, when they buy all of the raw materials to build a home, those are business-to-business transactions, right? And those are business transactions where because it's not in the retail sector, when they're purchasing those inputs, the fair tax is not levied. When they get the home constructed and they sell the home at the retail level to a consumer, a new home, the very first time, it falls under these parameters, and the fair tax is levied. So in other words, if the home, just for simplicity's sake, cost $100,000, the fair tax is inclusive, and the consumer would pay that $100,000, and the home builder would collect the $100,000, and they'd set aside 23% of it, or in this case, $23,000, and they would be responsible for passing it along to their state sales tax bureau. Now, when that homeowner has lived in that home for as long as they want to live, and then they resell it to another consumer, the fair tax is not levied because it would be considered a used good. And that's how it works. So you've got a consumption tax or a national retail sales tax on new goods and services, not business-to-business transactions, and not on used goods. And the rate is 23%. So to transition really effectively over to Jade, what we'd want to say is that the states will collect from businesses in the form of what I refer to as state sales tax bureaus. And there's 45 states that currently collect a state sales tax. And we've already got the infrastructure here. So what we're going to leverage that infrastructure. And if you move your eyeballs to the second bullet point, we will get 80% more efficient by collecting from 18 million to 20 million businesses instead of 120 million households. There's only one form to fill out, and it's real simple. You take your gross receipts times 23%, and that is how much you remit to your state sales tax bureau every month. And the retailers are incentivized and paid 0.25% for the collection of the sales tax for their troubles. And then they remit it on to the state sales tax bureau. So super efficient, super intelligent, and so many benefits, man, because if you think about it, you just pay your taxes when you make purchases, not when you're filling out detailed income tax forms and taking a lot of time to do it. So I could say a lot more, and I'm going to actually reserve the time for Jade because we've got a really special topic, and he's going to take you through in a detailed fashion something really critical. We are bleeding money that we're not collecting right now because of our current tax system. But as an overview, paradigm shift in the way we collect revenue. We move from an income tax system to a retail sales tax system to the tune of 23%. It gets paid when we buy and we go out shopping, and we broaden the base, and all consumers pay it when they buy things. So yeah, super simple, and man, a really intelligent system that was put together. So if you've got questions on what I've presented so far, please write them in. And at this point, what I want to do is I want to pass the baton over to Jade, who's going to give you just a brilliant overview and in-depth explanation around how the FAIRtax compares to the current income tax system evasion problem. And man, your eyes are going to be opened. So Jade, I just unmuted you. Are you with us?
Mark, I'm here. Can you hear me all right?
Yeah, can hear you perfectly. So I am going to give the keyboard and mouse over to Jade. And Jade, can you move your mouse? Yeah, you've got it.
Okay. All right. I'm forwarding the slide there. Well, thanks, Mark. I appreciate the introduction. And you know, when we think about evasion, which is our topic here today, it's always very much interested me because I'm a CPA, right? So I need to be concerned with details and numbers, and that always interests me. And when I hear, you know, the amount of evasion that we have, it's really troubling, because that's money that our current U.S. Treasury should be collecting. So. So thinking about the evasion problem with our current system, there was a study done by two PhDs, Dr. Sebula and the other doctor's last name I'm not going to pronounce, but it was just completed last year. And what it showed was that we have about a $700 billion a year income tax gap. And what that means in layman's terms is we should be collecting about 700 billion more a year. We collect, I don't know, somewhere in the $3 trillion range. We should be collecting 3.7 trillion, if that gives you context. And when you think about it, we've been running about a $1 trillion budget deficit for the past 10 years or so. Collecting the taxes that we should collect as the U.S. would almost single-handedly wipe out that budget deficit, and we'd have a balanced budget. So when we think about 320 million people in the U.S., $700 billion a year we're not collecting with our current antiquated income tax system, it's about $2,200 per American. When we think about projections for the next 10 years, there are several statistics. We have what's called an Agi Gap, and for those not familiar with that term, AGI is that little bit you get at the bottom of your first page of your tax return called adjusted gross income. This, over the next decade, is projected to be $33 trillion. And what that means is income underreporting to the IRS will be $33 trillion short. This is almost twice what the US GDP was in 2016, which is $18 trillion. And oh, by the way, this doesn't include deduction over-reporting. So with income taxes, we've got two ways you can cheat, right? You can under-report your income, or you can over-report your deductions. Also, we think about gross tax gap over the next 10 years. This is the average burden shifted per household because of these taxes we're under collecting. This grows from about $5,400 in 2017 to $8,500 in 2026. And this is the burden that effectively shifts from tax cheats, or scofflaws as they're called, to those who do pay their income taxes, which I imagine are most people on this call. And so that burden is growing to $8,500 a year for you to pay for those folks who don't cheat and who make up that $700 billion a year tax gap. Now, here's the funny thing. Over the next 10 years in this PhD study, the tax evasion is estimated to be 9 trillion. That's nearly 1 trillion a year. So that 700 billion a year that we're currently at, based on IRS data, is growing to about 1 trillion a year by 2026, which is just 8 years down the road. So it's growing much, much faster than our population is growing. So why does our government and we as citizens, why do we as citizens not focus on this $700 billion a year evasion and collection shortfall? Any guesses? One of the big reasons, unfortunately, is that with our U.S. government's deficit spending, we borrow from other investors in our country's T-notes and T-bills. The reality is there isn't as much attention on how much our Treasury collects, because there's always enough money to spend on whatever our politicians decide to spend our funds on. So imagine for a moment, if you can, a scenario where no one invested in U.S. securities and we literally could only spend what we collect from our taxes, like many local governments have to do. Do you think that we as citizens and our politicians would focus on that $700 billion a year, trending toward 1 trillion collection shortfall due to illegal tax evasion? I think that is an overwhelming yes answer. Another reason this tax evasion is growing so much faster than our population is what a lot of us refer to as the gig economy. You might say, well, what's the gig economy? Well, 25, 35, 40 years ago, every able-bodied U.S. worker received a standard W-2, and income tax evasion was a much more difficult proposition. Now, in our 21st century, with creative millennials and innovative ways to work, there can be young people with a livelihood that is derived from multiple sources. For example, let's say there's a young lady, 24 years old. She's a barista at Starbucks. She receives a W-2 there. She's also an Uber Eats food delivery driver. She sells used and new items on eBay. She walks dogs occasionally for money. She's a babysitter. She's a part-time balloon twister at the local Mexican restaurant. This person might earn $80,000 a year, with the IRS only able to see a small portion of their earnings from a W-2 perspective. This phenomenon is only going to grow, which really highlights the current income tax system shortcomings when it comes to collecting the full amount that our politicians believe the Treasury should spend our government funds on. So let's think about collections, fair tax versus income tax for a second here. You see here, individuals, there's about 155 million individual income tax returns filed. There's about 320 million people in the US, but with families and et cetera, there's only about 155 million returns and about 100 million US businesses. Interesting thing here is, building on some of Mark's statistics earlier, only 2.5% of US businesses are retail businesses. So we look at those 100 million businesses, the fair tax is only charged at the retail end use customer level for new goods and services. So this equals around 2.5 million retail businesses that the fair tax would need to be collected from, and excludes all business-to-business transactions. The vast majority of businesses will have absolutely zero tax obligations, the sales tax form Mark mentioned earlier, and no burden or compliance responsibility under the fair tax at all, including compliance cost, which people pay firms like, that I'm a partner within quite a bit of money to comply. Of the 2.5 million retail businesses, only about 15% of those, about 375,000, if we're doing the math, comprise about 90 to 95% of the sales of all new goods and services. So that's 375,000 businesses through 50 states is where the preponderance of Treasury receipts would come from, with virtually no U.S. Treasury compliance or collection costs required, and thus no IRS required. And this compares now to over 250 million individual or business income tax returns that are subjected to IRS audits at the current time. So moving along here, let's go to enforcement. So where is enforcement with the FAIRtax? It's with those retail businesses we just talked about, and really concentration on 375,000 businesses does the trick, covering 90 to 95% of all sales, resulting in all tax collections. The unique and elegant solution that the FAIRtax brings is that individuals pay the FAIRtax, but there are no ongoing compliance obligations by either the U.S. Treasury or the individual. The payment of the FAIRtax is anonymous at the register upon checkout. So you never have to save receipts, keep records, purchase a tax preparation software program, make sure your charity you give to provides a documented receipt of your gift. At Goodwill, you never have to ask for that receipt again to create a detailed log of 12 pairs of pants, 8 pairs of shoes, 10 shirts you donated, along with their condition and estimated fair market value. None of that. The only reason you may want to save receipts is to add up how much you actually paid in federal FAIRtax during the year, after you subtract away the 12 monthly prepaid checks you received during the year that reimburse you in advance for the FAIRtax needed on the basic necessities in life. That'd currently be about $611 a month for a family of 4. I doubt very many of us would care to do this and collect all these receipts and just to monitor how much we paid. And the great thing is you would never have to under the FAIRtax. And you know what? The IRS wouldn't need to know anything about you. For example, sometimes we forget how intrusive the IRS is into our personal liberty and our information. The IRS would no longer need to know your income, how you make it, from whom you make it, and when you make it. They never need to know your expenses, to whom you pay for what are your deductions. They don't need to know your car type, how many miles you drove for work, for charity, for personal purposes. They won't need to know your medical expenses if you've deducted those. They won't need to know whether or not you have health insurance. They won't need to know your home size, your square footage, whether or not you own a home, its cost, how much you might want to depreciate for the personal or the business use of your house. They won't need to know your bank accounts, your deposits. Right now, if any cash deposit is greater than $10,000, it must be reported to the IRS. They won't need to know your interest earned, whether you have foreign accounts. They won't need to know your investments, your stocks, bonds, interest earned, dividends received, capital gains and losses. We won't need to track the basis of your original investments. Your charities, which organizations you give to, what are their addresses, for how much, when did you give it?
Still with us, Jade? Yeah, do I have anybody with me? My computer is frozen. Can you type in if you guys are out there and you can hear me?
What about online purchases? There will be no possible way when we buy new products or services at Amazon or Dick's Art Supplies or an airline ticket on Southwest. No possible way not to pay the sales tax upon the consummation of your purchase. Well, to use some golfing lingo, the FAIRtax takes the hazard out of play. There's no way you can hit into the water with FAIRtax. And Mark, I'm trying to advance the slide here. There we go. Okay, FAIRtax is paid by 250 million individuals and tourists. And so that's a massive collection effort. And we'll talk about how the tax base is expanded here in a second. But the great thing is no compliance with those 250 million folks, as we just explained. So the result is the FAIRtax is being paid by many more people, with collection efforts only really concentrated on the few retail businesses. And in with this, as you can see here, the number of tax filers decreases 80 to 90% with the FAIRtax compared to the income tax. Right now, if you file a federal tax return, you're technically a tax collector for the U.S. Treasury. Currently, unless I missed something recently, we're not getting any reimbursement for our collection efforts. We not only have to collect for the IRS, but we have to create and calculate the invoice that they use to bill us for, which is a little bit different under the FAIRtax. As Mark explained earlier, the individual retailers as well as the states get a very small amount, 1/4 of 1% for their collection efforts and remitting that up to the U.S. Treasury. So we see here the tax base is $9 trillion under the FAIRtax compared to $5 trillion under the income tax base. You might say, Jade, how in the world is that possible? With an income tax, income only comes from one place, income, right? With a fair tax, a national consumption tax, spending and consumption comes from 4 places. It comes from income, it comes from borrowing, it comes from savings, and savings is a fancy word for deferred spending. And then it comes from theft as well. We can't forget, when people steal things, value, money, they'll go and they'll spend that as well. So spending and consumption comes from 4 places, income comes from 1 place. And unfortunately, our income tax base, it equates to the golden goose being strangled, for lack of a better word. The political feasibility of expanding the current $5 trillion income tax base is dire. Politicians know that attempting to collect federal income tax beyond the current payroll tax from the 40 to 45% of Americans who pay 0 income tax currently, it's a non-starter. No matter which side of the aisle you may gravitate towards, that's just a political non-starter these days. The fair tax greatly expands the tax base. So who will pay their fair share under the fair tax that don't pay any federal income tax now? This is one of the greatest things about the fair tax, which I think you'll love. Underground illegal gangs and organizations, as long as they consume and want to persist living, they'll pay the fair tax. Criminal activity, such as prostitution, always makes people giggle. So this is the oldest profession in the world. We've never figured out a way to properly tax this activity, though, which you think we would have by now. Under the fair tax, when criminals purchase and consume items, they'll finally be paying their fair share to the federal government. Al Capone, you might remember him, early part of last century, famously said that they can't collect legal income tax on illegal money. Well, he's correct as it relates to an income tax system. However, under the fair tax, as Al and his gang consumes new goods and services, and they buy their new machine guns or their Tommy guns, they'll be paying their full federal tax burden, finally. Illegal immigration and legal immigration are both hot button political topics at the moment. How does the fair tax play into this heated debate? Well, the fair tax is collected by all people in the U.S. who spend money on new goods and services. This means that if you intend to persist as a living human being, you're likely consuming goods and services. So this also means that every person in the U.S. will be paying their full federal tax burden on purchases beyond the necessities of life after considering the prebate. Currently, many people in the U.S. illegally, while they pay state sales taxes on purchases, are not filing federal income tax returns, and as a result, not paying any federal income tax. Under the fair tax, this changes, since if you're in the U.S. and living, you're paying the fair tax. The kicker is that with the fair tax, the prebate, which refunds you in advance of your fair tax expenditures on the basic necessities of life, $611 a month for a family of 4, is not paid to people residing in the U.S. illegally. You have to have a Social Security number or otherwise be in the U.S. legally to receive the prebate. So this equates to a very strong incentive for legal immigration, which everyone wants. The effect of this new innovative tax collection system is that you, as an honest taxpayer, will be paying less of the total tax burden, since the tax base is almost doubled with the fair tax relative to the income tax. So let's think about state sales tax evasion and enforcement for a moment. California actually had a state sales tax evasion study done, and it equated to around 2.8% of evasion. When we compare that to some of the statistics we talked about earlier, currently, when we think about total income tax receipts, our evasion rate is 29%, cresting towards 34% in 2026, based on Dr. Sabula's PhD study. So think about that, 30% income tax evasion versus a 2.8% state tax evasion. Now, this likely in California, this likely includes use tax. You might be familiar with use tax, in that technically if you buy something in one state and you go consume it in another state, you should remit some use tax on that, since you didn't pay sales tax in the state where you live. Most people don't pay it. It's highly abused, and it's a state tax concept that would not exist under the fair tax, because the fair tax is a national tax, so state to state wouldn't matter. Also, California, sales tax evasion is likely higher than a U.S. national average, given the diversity of California businesses and activities. And so when we include the use tax and we think about the diversity of California, that 2.8%, we don't know exactly what it would be, but it's likely be quite a bit less. I would guess in the 1.5% to 2% range, because as long as we have human beings, we can never make any system foolproof. There'll be that lawn guy who says, hey, I'll mow your lawn. You know, I'm not going to charge you the fair tax on my lawn service. Just pay me in cash. But you know what? Those are going to be the small potatoes at the fringes. When we think back to those retail companies we talked about earlier, and 375,000 businesses at the retail level making up 90 to 95% of collections, we're talking small potatoes compared to the 700 billion a year we lose now in tax evasion. So never let perfect be the enemy of good and great, which is what the fair tax is. Also, why is sales tax a better system than income tax? The society is becoming more cashless now than ever before, and it's much more difficult to evade a sales tax and cashless transactions, internet, etc., quick pay, Apple Pay, things like that. Another thing about the sales tax, why evasion is less than an income tax, it takes two to tango. Those 155 million income tax returns, all it takes is you. No one else has to agree with you to cheat and defraud the U.S. government of the treasury collections they're rightfully entitled to. With the sales tax, you need that lawn guy to say, hey, just pay me in tax. And then you've got to agree to it as well. So that it takes two to tango concept also helps limit sales tax evasion. Also, just the fact that there's 80 to 90% reduction, like Mark mentioned earlier, in the number of filers in the fair tax versus the income tax, just those businesses, you're just taking the hazard out of play when there's 90% less filings to perform. It's just pure statistics that the evasion goes down. So let's move on here in this slide. There you go. So which system results in better enforcement and collections? That's a quasi-rhetorical question, but given these facts, which system are you thinking to yourself is better right now? The fair tax has more collections, bigger income or bigger tax base, and less enforcement needed. Which system is the most cost-effective for our U.S. Treasury and our annual budget? You know, our IRS annual budget right now is $12 billion a year. The fair tax would have a very small sales tax bureau to basically administer bank accounts to collect all the money from the states that have remitted each week and each month. So I don't know the estimated cost of this agency, but I'd suspect it'd be something like 1%, which would be about 120 million annually relative to the $12 billion IRS budget currently in effect. And that IRS $12 billion budget includes I think it's about 900,000 employees, almost a million people working for the IRS. So the bottom line is, if the effect is really to reduce our U.S. Treasury expenditures, which can do one of several things. The expenditures on the $12 billion of budget. So we can use that to reduce our debt, help pay for other needed infrastructure or projects, build the wall or not build the wall, whatever you want to do, as well as lessen the tax burden on each American who needs to pay the federal government. So move slides here. So let's think about motivation for evasion. Which system encourages it more? It's interesting on this fact, Paul Ryan, Speaker of the House, has espoused that, well, you know, given the drop in corporate and individual income tax rates from the recent tax legislation, that should help ease and decrease evasion because people will be more apt to pay their legal tax obligation now since the tax rate's lower. And with all due respect, we just have to respectfully disagree with that statement. That's unfortunately not true, given how human psychology works. With a tax cheat, and oh, by the way, remember Will Rogers' famous quote who said that the U.S. income tax has made more liars out of people than golf has. So once a person is justified and rationalized in their mind that cheating is acceptable, they very rarely, if ever, turn back from that decision. And Steve Hayes, the president of Americans for Fair Taxation, who's the grassroots organization behind the fair tax here, met with Paul Ryan last year, actually. I actually got a meeting with him. And Paul Ryan asked how evasion could be better curtailed under the income tax system. And Speaker Ryan did not like Steve's answer, which included spending billions more on enforcement efforts, hiring many more IRS employees, with the unfortunate collateral damage of many honest tax-paying Americans like you and I being subjected to greater IRS scrutiny, more audits, and including the dreaded civil asset forfeiture that you might have heard about, where the IRS can seize your money and your property without any due process at all. The unfortunate thing with the income tax is that illegal evaders, if they file an income tax return at all, they don't put an E up in the upper left-hand corner of the return, letting the IRS know that they're evading income taxes that they legally owe. So moving on here, fraud triangle. You see these three aspects here. I'm an auditor, so I sign public company audit opinions, which says that those financial statements are free of material misstatement. And part of our generally accepted auditing standards, we think about fraud, right? How would a company commit fraud? And there's usually three things present: rationalization or justification, incentives or pressures, and opportunity. And we call it a three-legged stool. So I would say, why does the income tax encourage excessive tax evasion when we think about the fraud triangle here? Well, let me back up for a second and say, let's keep the fraud triangle in mind, and we'll come back to it. But I want to bring you to a quote from Adam Smith, one of the gentlemen instrumental as far as thought leadership in the founding fathers. And when the country was founded in the 1700s, he had a quote that said, "The property which every man has in his own labor, as it is the original foundation of all other property, is the most sacred and inviolable." So what does that mean? What it means is, from a psychological perspective, the vast majority of human beings feel the way Adam Smith wrote about the fruits of our own labor. In modern day vernacular, our income from our profession, career, our job is our most sacred property, and it forms the basis for most all other property we acquire: our house, our home, our clothes, our goods. Working back through the fraud triangle, the current income tax system, since it's taxing the sweat from our brow, the fruit of our labor, automatically creates a mechanism for rationalization and justification in illegally evading the income tax, the law says we owe to the government. Our system is predisposed to encourage illegal tax evasion. Again, with the fraud triangle, what about opportunity? This is the most important leg of that three-legged fraud stool. So for example, if you have a cash register at your business, but the door is locked, the cash register door is locked, you might have all the rationalization and incentives and pressures, but if you can't get in the drawer, you can't get the cash because there's no opportunity to get the cash. Well, with the FAIRtax, the fruits of your labor are not being taken any longer, and your income is 100% non-taxable. You think about the opportunity we just talked about. The number of filers goes down by 90%. The number of businesses who collect 90% of the taxes, 375,000 businesses, and they would not risk their state and federal license authority and standing to evade the sales tax. So the opportunity is diminished, not 100%, but by just an immense amount. With the FAIRtax rebate mechanism, your basic necessities of life are purchased tax-free. So this means that any payment of federal income tax you make is truly optional or voluntary. And with the FAIRtax, only new goods and services are taxed. So this means that if used products are purchased, Americans will be able to legally avoid paying the FAIRtax. For example, a used car, a used home. Over 80% of home sales are used homes already. Used items on eBay. You know, as a side note here, this will be an incredible boon for the environment and recycling, with environmental stewardship and reusing of materials being more incentivized than ever possible before. And before, when we think about rationalization and justification, just think about it. I didn't make that link, and I'll make it for the listening audience. When we think about our most sacred property being taken from us, the fruits of our labor, our income, which is what our current income tax system does, it leads to that easy path into rationalization and justification. Of course, it's not the right thing to do. I'm just saying, with human psychology, it very easily leads there. Well, you know what? The government spends on dumb things anyway, so I'm not going to give them the full burden that I owe. I'm going to not report that income. I'm going to overestimate that deduction. You can see the rationalization and justification very easily with our current system there. Okay, moving on here. Let me click the button. So, so the question is, well, which system is voluntary as opposed to compulsory? Again, that's a little bit of a rhetorical question there. Compulsory is what we're currently under, the regime under the current income tax system, voluntary purchases beyond our basic living necessities is what the fair tax would introduce. So what is the effect of less evasion? The burden on honest taxpayers, as we talked about earlier, that burden is trending to $8,500 by 2026 that every American household will have to pay for that dishonest taxpayer. Their burden is lessened immensely. Fair share, who pays the fair tax? We talked about criminals and those in the U.S. illegally finally paying their full federal burden under the fair tax. The unfairness is removed from the system. In campaigns, in elections past, Warren Buffett got a lot of airtime for saying that it's not fair that his effective tax rate, which is mostly probably capital gains, which is taxed at a much less rate than income, is much less than his secretary's tax rate. Although he paid much more in tax than his secretary, the tax rate was higher, and Warren Buffett didn't think that was fair. No other system out there, no other tax system proposed fixes that except a fair tax. So with the fair tax, I'm willing to bet, although Warren Buffett lives very modestly in Omaha, I understand it's a very old home and it probably has wood paneling and shag carpet that hadn't been updated for 20 years, and that's fine, but I'm still willing to bet that he spends more than his secretary does. And when you spend more into the fair tax, your rate is higher and your tax, the taxes you pay in consumption taxes are higher. And lastly, I like to use the uber rich example, and let's take Mitt Romney. You might remember him from the 2012 presidential election. In his personal life, very rich, but he's not earning a W-2 paycheck or income, and all of his, I think his effective tax rate with his tax returns that were published was something like 13%. I might be off a couple percent, which is basically a 15% capital gains rate, probably reduced by a few percent because of charitable contributions. So with Mitt Romney paying a 13% rate, and here's the thing, with the fair tax, he'd be paying a much higher rate. Because as long as Mitt Romney goes and spends like a rich person spends, he'd be paying near that 23% rate in fair tax. So the uber rich actually pay more. Criminals and those in the U.S. illegally finally pay their full federal burden, and the unfairness is removed because Warren Buffett's secretary will finally pay less of a rate, as well as less in gross taxes than Warren Buffett, her boss. So politicians on both sides of the aisle, politicians, why is there a lack of pressure to address this evasion? It goes back to that deficit spending we talked about. And so really, there's a lack of pressure because you and I as citizens probably aren't applying enough pressure. So let's get involved and demand action from our congressmen and women and our senators to fix this problem. This evasion problem would be one of the single biggest economic boons to the United States if we were able to solve it, and the fair tax takes it out almost 99%. Mark, that concludes my prepared remarks. Happy to take any questions.
Dude, wealth of information, like I told everybody. Thank you, Jade. Yeah, really incredible. We've got mostly who are with us today, Jade, are experienced fair taxers. I think that last comment you made, that about what we need to do to make this happen, that certainly spiked something for Frank. And Frank asked the question, we all here know that the fair tax is the best solution to funding the government, but politicians will never allow it to happen unless we force them to. How do you guys propose we make that happen? So, Jade, maybe you could expound on what you said as you completed your talk.
Yeah, you bet. You bet. Steve Hayes is really focused on this, and he's the president of AFFT. And he said that's one of the biggest areas that we should be going to speak to our politicians about. And basically it goes something like this, and Steve Hayes has this written out at fairtax.org on how to communicate with your elected officials. And he basically says, listen, tax systems aside, the current system has a $700 billion a year tax cap. It's trending to $1 trillion based on this PhD study. What are you doing about it as my elected official? That seems like a lot of lost revenue. And actually, you put them on the spot and then you say, well, I assume that you're not okay with that. Well, and then of course the natural reaction is, no, of course we're not okay with that. That's horrible. That's thievery from our U.S. Treasury. And then you can lead into the FAIRtax and how it solves that. I talked about that with my congressman in Colorado. I got the impression I needed to probably have a few more conversations with him. I asked him to be a co-sponsor of the FAIRtax. He said he actually went and talked to Kevin, what's his name? The chairman of the House, Kevin Brady, chairman of the House Ways and Means Committee, who was formerly a FAIRtax sponsor, and he said he heard good things about it, but he didn't want to co-sponsor at the time because they were trying to pass the most recent tax legislation. But so I plan on meeting with him again and putting the pressure on again to become a co-sponsor. So I think that's what, Mark, I think we until we get fired up about it, nothing will change. And, you can't blame the politicians. You go to where the squeaky wheel is. If you have only a limited amount of grease, it goes where the squeaky wheel is. So we need to become the squeaky wheel. And Steve Hayes has some great information on the website to help us do that. Let's just go do it.
Yeah, couldn't agree more. That being said, I'll say a few more things about getting involved that could actually speak to what you just said to Wade. So there's ways to be in action. I really like this website, Popbox. It's a website that lists all of the current legislation currently proposed in Congress, and you could search for HR 25 and S18, click support it, leave a comment. It's just such an easy thing. Like, if we spread that, like, man, politicians pay attention to that. It's like one of the really useful tool that they have. And when they see a lot of citizens in their district supporting or rallying against a certain issue, that has influence. So another thing we do, write, email, phone, and visit your congressperson. Jade spoke to that. My great colleague, Larry Walters, who's with me here in Florida, has done that on a number of occasions, and that created a co-sponsorship. So, we could do it. It's just a matter of really getting out there and, like Jade said, opening your mouth in a really thoughtful way. And one great way to do that is through talking about the evasion problem and how the FAIRtax can solve that. And then, we need money. How about that? We need money for the purpose of advertising, for the purpose of employing full-time staff lobbyists who can actually be in Washington and put the pressure on and have these kinds of conversations like full-time. And that would be a great use of our investment dollars. And there's an easy way to do that. You go to fairtax.org. Go over to the donate tab on the very right, click join the 1040 club, and it's $10.40 a month, guys. A few Starbucks coffees, and man, it's just a great way to support this incredible legislation that would make such a difference for our country. So yeah, we'll go to questions quick here, but any other thoughts on what I've shared, Jade, as it relates to ways to make a difference?
Oh, no, Mark, I would just reiterate, I joined the 1040 club, and you don't even notice it. You can put it on your credit card. I just encourage you to do that, and it's a small way. If enough of us did that, we could actually start running advertisements in various states and even nationally. And the more ads that are out there, the more attention it gets. And here's the thing, Mark, everyone says this, and Ron Malero and Bob Paxton on their FAIRtax Power Radio, which I encourage everyone to listen to. Every Friday a new episode comes out. You can get it on podcasts on iTunes or Spreaker. They go into great detail about this. They talk about the ways that you can get involved and the money and the advertisements, etc. So encourage you to listen there, donate to the 1040 club, and let's get it out there.
Yeah, it's great. All right, well, you've done it. You've done it, Jade. You've outlasted the questions. So I appreciate you. Thank you for joining us tonight and sharing your depth of wisdom and knowledge you have on the FAIRtax as it relates to evasion and how the FAIRtax would solve that. Thank you, everybody, for coming out tonight. Come back fourth Thursday of every month, and we appreciate you guys. Have a great night, and we'll see you in May. Bye for now.